Welcome back to the Williams Real Estate Channel. I'm your host, Geordie Williams. Tonight we are running through the macro market update for Feb 2025. So we'd like to firstly kick it off by doing a quick snapshot of the 18-year land cycle. It consists of 14 years up and 4 down. We are, I'd say, 18 months away to peak market, give or take. But come August 2026, that's the market is due to top out and potentially turn. But come end of 26 and 2027, it'll be well evident that we've entered the next land-driven downturn. This will be the best time to buy in our lifetime. And so buyers beware, do not get carried away with the herd and keep charging into Brisbane, Perth, Adelaide, and some regions like Townsville and Darwin and so forth. Adelaide, these markets are hitting their limits and at some point will switch off and go the other way. And unfortunately, towards the back end of the booms, a lot of the mainstream punters like to charge in with the fear of missing out. But as always, markets do go through their final heat and suck a lot of people in, and they do unfortunately learn the hard way. So there's only certain markets that we're focusing on now, and on certain types of products within those markets that are set for the years ahead. Based off this 18-year land cycle, I use it as a framework to run reports of many sales data, stats data, historical data in all areas across Australia to work out which markets are best to perform in the years ahead, as we are sitting now in an equivalent point of the cycle, June, July, August of 2005. So that's the outlook based off the 18-year land cycle. So keep that in mind. These future slides, I use them to work out where we sit and to correlate it back to the 18-year land cycle so we can paint a picture for what is the market's going to look like for the years ahead. So the RBA dropped the cash rate down from 4.35 to 4.1. I was surprised, actually, very surprised, almost shocked that they did so. And it really now shows how much that they don't see the land market and how land has been written out of economics, because they're only getting two equations, being labour and capital. And this is going to be inflationary, I believe. The market is still in full swing. There's optimism coming back. This is ultimately not going to really impact really much on people's mortgages. More so, it has shifted, and I can already feel it in the market happening, that people are confident. It's now becoming quite, even in the more softer markets, they're starting to show green shoots, and it's becoming more competitive. So whether or not it was pushed by the federal government, potentially backroom noise they would have been getting, I would say so, definitely. So they may have crumbled under the pressure of the media, mainstream, and government to start dropping. But it's very premature, I believe, because it's potentially could unravel another wave of inflation, as inflation is still not down to the trim mean target of 2.5%. So within the band, it's sitting at 3.2. Yes, the old groups is at 2.4, but the trim mean is what they use as an indicator, is still sitting above the target range. So we could be playing with fire, I suspect. And this plays into the final few years, this winner's curse we're in now. It's now setting a new optimism is starting to return. Rates are coming down. People in the mainstream think the rates are going to continue to go down. So there's buyers are rushing in now with confidence. And we are now away at the races. However, in the background, the unemployment rate continues to keep trending up. It is record low still, but it is on an upward trend, and we're now up to 4.1%, up 0.1% from the month before. So it is on the way up, unemployment. So this will continue to run like in history, and then eventually it will just run and spike up to a good 7, 8 to 10% in the next land-driven downturn. The US have started or held the cash rate, their federal funds rate at 4.5%. As you can see, they've been trimming it back the last couple of months. The Fed is saying that he's holding where it is now, Jerome Powell that is. The current cash rate even though Trump was obviously putting pressure on him to continue to keep dropping it. However, he is stuck in a rock and a hard place, as in the States, inflation is now starting to trend up. So I suspect this is going to happen in Australia. We'll start importing this higher inflation, but then also our domestic demand will continue to grow with now the optimism coming into the market brought on these interest rates dropping. That will stimulate the economy, and I will definitely predict, and I think that inflation is going to trend up again, like what is now happening in the US. So brace yourselves, don't get too overextended now. I can now really, I guess, visualize how the winner's curse is going to go. Everyone's going to get sucked in with all this optimism, buying overheated markets, and then rates will potentially go up again. And that's what will inevitably make the market turn. So the US unemployment rate has trended down, so it's tightening. So that's good, strong growth. That'll feed into further optimism into the US market in the coming months. The Dow Jones is already pricing in all this bullish activity, hitting all-time highs. Bitcoin is coming, starting to correct a bit, so I don't suspect it's going to continue down. It might stabilize a little bit, and then I think we're due for a final Bitcoin explosion. Eventually, time will tell, but who knows? This is by no means financial advice. This is just my thoughts of how I see these assets performing based off the 18-year land cycle. And we now got the ASX making a slight retracement, but I suspect it has still a bit more room in the tank, as what happened between 2005 and onwards up until 2007. This is a good one that I like to keep an eye on, which is the 10 and 2-year Treasury. Every time it's gone negative and then positive again, and then gone very aggressively higher, it's been a leading indicator of a coming recession. So we did go negative, like what has happened in 2020 or 2019, 2006-07, then had a big run up. That was then the GFC, 2000, 2001, and then that's dot-com bust in the late 80s, 88, 89, and then as soon as it shot up, then that was the 90, 91 downturn. So it has gone negative. So this could be any time now, really, based off this historical data. My screen has decided to black out. She's back on. So time will tell. I'm keeping a key eye on this one, and this is one of the main reasons why I'm starting to move more defensively into cash. And this is the land and housing builders, two of the main big guys in the US. These guys, I keep an eye on their share price, as their share price began to go a lot negative in 2004, 5, and 6, prior to the whole market tanking, both of them, and they've now started their retracement. So it's about 12 or 18 months retracement until it actually hits the whole market. Once the whole market then shifts into a bear market, because these stock prices or these businesses are pricing in future reduced earnings, because the land markets are already starting to soften. I can feel them in New South Wales, Victoria regions. Land prices are already softening. Regional Queensland is still going positive, but is starting to hit its limits. It's not as booming as it was a year or two ago, so it is reaching its limits. At some point, all land prices in the regions will top out, and then the ripple effect will come back to the main metros and then eventually back to Sydney and Melbourne. So this is a key indicator I'm keeping an eye on. If it continues to, which I think it's well broken through the point of no return now, I don't think it's going to continue to go up. So I think it's going to continue to correct all the way down. It'll lose about 80% from peak to trough, and then once it's lost probably 60-70%, then I think the whole market will then start to correct. So that is the home builders in the States. And as you're aware, Trump is well and truly working his way through sorting out the mess. Yes, I get it. If you see it on the news, you may be thinking, holy shit, what's going to happen, World War III? He's a deal maker. He's been doing deals his whole life. He's using leverage. So the US has been funding 50-60% of the war, and 45, 50% coming from Europe. Ukraine doesn't have any money left, doesn't have any room left in the tank. So he's trying to cut a deal ultimately. And the way he's going to use that is by bringing both Putin and Zelensky together and ultimately cutting a deal. And land is going to come into that equation, of course. He's a property guy. So he is going to try and recoup the 300-odd billion the US has pumped into Ukraine, as there's no security on that. So he's going to use leverage by way of saying he's out of Ukraine and fight it yourselves, unless if you give me a deal, which meaning a deal of setting up mines to mine rare minerals out of Ukraine to generate an investment to make a return on their $300 billion that they've given to Ukraine in the war. So that's the deal he's trying to get over the line. And Zelensky is basically saying, no, I don't want to sign up to that. I just want you to continue to keep funding the war and for security of the whole world. So he's taking the Democratic, I guess, position on us. Ultimately, Trump is a typical real estate leverage negotiator. He's using his leverage. So I think he's going to do a clean sweep within the next 6 months and will clear all these wars out. He'll mark himself victory man, best president in the world in history to clean sweep all these wars using tariffs and the same strategy where he's using over Zelensky. And once those deals are all made and all the wars come to an end, that is going to set off mass optimism, and we'll be entering the final 12 months of absolute boom. So it'll suck in everyone. He'll stand up and say he's the best president in the world. He's created the best global economy in the world. That'll mark the top come 2026, early 2026, once he's cleaned up all the wars. And mass optimism will be back. Everything's going to be pumping. Everything's just going to be going off its heels. And it'll be like the market will turn and everyone will think, how come no one ever saw it coming? Well, if you study the 18-year land cycle, you can see it right in front of you before it'll happen. So that's how I see it all playing out. I'm not too concerned. I'm very optimistic that he will definitely cut deals, clean up all the mess, clean up all the wars, set off mass optimism, and the markets will be rocking and roaring. But be careful, buyers beware, do not get caught up with all the fear of missing out in the FOMO, because when the market turns, people will be learning the hard way. So if you need help, reaching out. But as always, this is by no means financial advice, as I'm not a financial advisor. I am a professional investor. Personally, I've built my own portfolio and I help people do the same by way of buyer's agent work. If you want help buying investment grade stock and navigating the markets ahead, reach out today. But before you take any action after watching this content, this is by no means general or personal advice. Seek personal advice if it's a tax accountant, a mortgage broker, a financial planner, financial advisor. Do whatever you got to do. Talk to whoever you need to talk to. But if you want buyer's agent work, and if you need any contacts in the industry to build that team around you, shoot me an email, shoot me some feedback, see what you think. I'd love to hear what you guys think. Comment below, and let's see this market play out. Until next time, thank you for watching.